Yo, what's up, everybody? It's Marco from Digital Dash Trading. In this video, I'm going to be showing you guys how I do my journal entries, like how I journal my trade, the type of notes I put in my journal before and after a trade so that I can make improvements in my trading. There's many different ways to do it. All of them will work to improve your trading if you're doing it in a way where you're learning and picking apart your L's. Exactly how you do your journal doesn't matter, but the biggest thing is having a journal, right? The number one thing that's going to make trading harder than it has to be is not having a journal and not learning from those losses. Just having data to look back on to see where you can improve. Again, there's no right way to do this, just making sure you're doing it. So I like to start off by first just putting a date. My first slide is usually just a date. I may color code it, but most of the time it's going to be white if it's just a regular trade. If it's something super profound to me, I'll come through and I'll change like the theme. So this cover page can be, something that stands out and it's not just a white background. But for the most part, if it's a regular trading day and it was nothing specific that I want to come look back on, I'll leave it just a regular white background like this and just put the date and maybe a heading on it, right? This case is, I said, always go with the flows of the market, always go with the trend, investigate if the trend begins to change with it, right? So that's pretty much like the motto or the slogan of this trading day and everything that happened within it. So I'll put that on the title page as well. Then sometimes if I had a pre-market plan, I'll come through. The next slide will be the pre-market plan, what I saw, how I felt physically, mentally, whatever it is going into the market. I'll make sure I'll put it down pre-market. If I see something, if I had thoughts of the market, right? If I had a plan that changed, all of that is going to get written down here. Sometimes it's in Discord and I just go back to Discord and type in here. But that's one thing I'll have too is like, what am I feeling? What are the intraday, like an intraday journal, right? I'll come back and type this stuff in the journal after a trade, but I'll also document in Discord or have a notepad or something nearby so I can know what I'm feeling when trades are happening and as the market is developing. So everything is not looking back, right? I'll do that and I'll record my screen. So I'll have those live emotions, how I was feeling, and the thoughts and theses I was coming up with as the market develops. So here I said I couldn't find any quality zones that would keep the uptrend intact after taking out the highs we wanted to see removed to form the next leg up. I happened to find a demand zone, but it was very small on the 2-minute, and those zones have been extremely low quality. So this is stuff I was noticing before I even took a trade, right? So when something happens, say you took that demand zone and it didn't work, you have this information to go say, okay, this is something I saw before. Like if I see this happen again, let's not take a 2-minute demand zone if we were able to identify that there were no quality zones and these zones have been failing, right? So if I see this and look back and say, okay, history told me this happened before, let's not do it again. That's a way that simply just having this journal and taking these notes, your trader can improve. So hopefully I won't make the same mistake again. And another thing with this is a lot of times I'm typing this quick, right? A lot of times you may take a loser, you may be frustrated, right? So you can come here. If you got to vent, come vent in the journal, right? You really got to, you're going to want to look back at this stuff so you can make the adjustments to your trading that you have to make. So just make sure it's raw. If it's typos in it, whatever, if it's profanity in it, whatever. If you're just rushing in here, it's better to rush through this and get some of this stuff down than to not do it at all. But just to continue, I said we knew things were choppy from yesterday. Much supply above plus first signs of trend changing to bullish, but not many signs of full healthy uptrend. No new demand created at highs, plus things like falling deep into ranges before moving higher. Big traps for both sides, right? So I'm pretty much saying I identified choppy price action yesterday, which is another indicator. That gives us more context and clues about the market. There's a lot of supply above, so that gives us more clues. It could be choppy, right? We could have a hard time, a slow grind up, a hard time clearing highs because there's a lot of supply above. And there was a first sign of the trend changing to bullish. So, that's another, that makes trading a little bit harder too, because now when you're trading supply and demand, you want trending conditions. Well, now trends are changing, right? So it's not just as fluid as new higher highs and lower lows being created. Now things are looking a little different. Not many signs of a full healthy uptrend, right? That's what I noted right there. And then why? Why was that? No new demand was being created at highs and price was falling deep back into ranges before continuing higher. So it wasn't a healthy uptrend. All of this was noted pre-market. Boom. So I'll come in there and put that. Then I'm going to start, going into the trade and what happened during the trade. So I was looking for buys, but I spotted the trend change on a 5 and tried to get in short, thinking the buy imbalance would break down into our zone. I tried this trade twice, but I jumped up because I sold low on the zone that wasn't supply yet. I didn't have confirmation when we could have pulled back into 43.68 where actual supply was. After the pullback into 43.68, price went and took out structure, leaving behind valid supply. I spotted the trend changing, but ignored it and missed a good trade to take a lower probability one. Also, all rallies were failing. For my thesis to be the uptrend is still intact to run above highs, prices would need to be pushing higher on each attempt. So at this point, we were trying to push higher, and it kept failing, right? I really wanted to see an uptrend. If I was taking buys, then I really would have liked to see demand get created up at these highs so I could take a trade here, buy here, and have continuation higher. I wasn't seeing it. Price was changing right in front of me, and I was ignoring it. Price was changing right in front of me, and I tried to short because I was aware that it was changing in front of me. I just was, one, impatient, and two, I had no conviction in the trade yet. I was still in this long bias, right? Because I was still trying to target down here so I could take my long trade down here. So I got in here. As soon as I spotted that the price was changing, I was correct about that. You got to pick out what you did right and what you did wrong. I was aware that price was changing. Why was I aware that price was changing? Because I saw, I'm expecting an uptrend, and we pushed down and took out lows. So really I should be now looking to sell. So that's what I was. I was looking to sell, but I sold, I sold here. I was hoping that we would push through this area with some momentum and get down here. But I sold low, which made me liquidity. I got out the first time, taking a small loss or break even, and then I got in again once we pushed up a little bit and tried it again. I think I got in down here was the second one at the bottom of this green candle. Tried it again, got a nice push down, and then price started turning around. So yeah, price continued to push higher and stopped us out. So that was the first trade I took, right? First two trades. I sold out of one quick, and then I sold out of the second one quickly again. But the proper thing we did was identifying that the market was changing. Well, it pushed back into the highs here, pushed back into highs, showed us that sellers were stepping in again in this area, and price moved down. It created and left behind supply. That's what happened. Price pushed down, change of character happened here, pulled back, demand, supply was formed, strong enough to take out this leg and give us a break of structure. So now we have valid supply left behind at 43.66. We had a change of character and a break of structure. There's no reason why I should be looking for buys. The trend, although we are in a bullish trend on the higher time frames, for me to take a buy on the 5 minute, the time frame I'm executing on, the trend has to be intact. Bullish trend on the 5 minute. So I was just ignoring those signs. I was so focused on wanting to take a trade down here and get in long down here, right? So what happened next? I said I saw this high get taken out, but there were no notable demand zones left behind to keep price up and buyers in the market. Very important. So I was bullish because this high got taken out. Right? The only demand that was near was the one I tried to take. The only demand that was near those highs was the one I tried to take. So was that a bad zone? Was that a bad trade attempt? No, I don't think so. I don't think that was a bad thesis. What was bad was the fact that we were all the way up here, right? And this allowed price enough of a range to change a trend on the lower time frame. Now, if we would have pushed up, left this little zone here, left some highs, took out these highs, and returned, and then tap back into what, 43.56 or something, and went, that would have been valid. But we also pushed into supply above with no new demand at the broken supply that we took out at these highs. So that's what started accelerating our losses, and that's what allowed us to would allow sellers to come into the market. So just like we pushed above this zone, right? Pushed above this zone, held, and pushed higher. We took out this zone and didn't leave any demand behind to keep the trend intact. So it was the first sign. Falling back below was the first sign that trend was changing. and I was ignoring it, still trying to take a buy at this zone, and price ripped right through it, right? So by the time price came back to the zone, I wanted to go long from I was already trading against the by the time price came back to the zone, I wanted to go long. Here's the typos. I was already trading against the trend on a 5, 15, and 30 minute. So by the time price pulled back to my zone, after this change of character happened, right? After all this bearish price action happened, this changed the trend to bearish on the 5, 15, and 30 minute. So the only bullish time frame that was still intact was the 1 hour. And if all the smaller time frames are changing, then that can tell us the 1 hour most likely is going to change too, right? If all the 15, the 5 to 15 and 30, if all of these are bearish, more than likely the 1 hour is going to align with the rest of them, and the trend is going to continue bearish. But I was still looking for sells. So that's where I went wrong pretty much. I was on the wrong side of the trade, and I wasn't paying attention to what the market was exactly showing me. So yeah, that's pretty much what happened with the trade, why it didn't work. And even this slide alone, you can learn a lot from just this slide. If you annotate, right, break down your trade, annotate, you can learn a lot and reflect just simply from that. So the trend was very obviously bearish on the 5 minute where I'm executing the trade, so I shouldn't have taken a buy. I was so stuck on the 1 hour still being bullish that I thought it was worth a try. I then entered again after the zone was broken as price retested, hoping it would push up, and took an even bigger loss. And then I did it again and ended up down $262. So this is when documenting this is when I get into like the psychological aspect, the execution aspect of the trade. The technical analysis I broke down, but this psychological aspect, not only was I stuck in a bias back here, but here is when I started over trading. Here's where I started revenge trading, right? I tried it again, right? Even with all the evidence, even seeing all, even at this point, seeing the change of character happen, the break of structure happen, structure was taken out, new supply was being created, supply is being respected, even seeing all of this evidence that I'm on the wrong side of the trade. What did I do? We pushed, we ran my zone, we pushed into this zone that was below. Of course, we get a bounce at this zone that's below because why? People are taking profits, shorts are closing, and buyers are trying to enter the market. Buyers like me who are revenge trading or entering here again, trying to buy again, thinking, okay, I had a bad entry. And what happened? I got stopped out again. So now I'm revenge trading. So what was the new rule that I put in place after this happened? I said, after I got stopped out, I immediately saw a push up on the next candle and bought again. So I put in a new rule. After I take a loss, don't take a trade for the next 10 minutes. Why? This will allow 2 new candles to form. And psychologically, this will give me a break, preserve my account so I don't put on a stupid trade. Allow me to look back and see, okay, the trend's changing. Accept that you're wrong. We're now on the wrong side of the trade. And like I said, technically, this allowed these 2 candle forms. We'll see, damn, okay, that really is not a bounce, right? So it'll just give me an entire reset and allow me to take smaller losses. So again, simply from documenting this and identifying what I did wrong, I can put new rules in place and learn from those losses and try to never make those same mistakes again. We identified things were getting choppy and tricky yesterday. We should have been on our toes and going with the flows of the market. The higher 4 hours shows us price would have a hard time coming back into these areas. The lower time frame told us to keep looking for buys. The biggest lesson today was to always check market structure on all time frames and be aware of where we are in the market. So that's bringing everything together, concluding everything. Then for my last slide, I like to put improvements, point out again, reinforce, affirm what I did right, what I did properly as a trader. Make sure you're not going too hard on yourself. Sometimes when you journal after a loss, it's frustrating, bro. I be in here spazzing sometimes. It is what it is. But I do like to reinforce the things that I did correctly so I can continue to do those things without even thinking about it. But I do like to really put an emphasis on the reason why I lost so I can change those. You're going to do the right thing subconsciously. Once you see what works, you're going to continue to do it subconsciously. It's the losses, it's the things that you're doing wrong that you're missing. That you got to really put emphasis on and make sure you tighten up on. So my improvements: always check the market structure for all time frames. Never take a trade on the 5 minute that's against the trend, regardless of the higher time frames. If the 1 hour is bullish and I'm looking for buy, here's the typos. I'm looking for guys is crazy. And I'm looking for buys, the 5 minute must be aligned. I shouldn't be seeing pullbacks into ranges that invalidate the trend on the 5 and still try to take buys there. At that point, I am counter trend trading and the odds will be against me. This is the biggest thing to take away from. This is the biggest thing to take away from this, but more importantly, this day only became such a loser because I was emotionally revenge trading. I saw the wicks after I got stopped out and thought I could jump in again right away without even allowing 5 minutes since my last losing trade to pass. A lot of the time, you'll take a loser with a stop that proves you wrong, get stopped out, see price going back in your favor and jumping again right away like that's not a recipe to become liquidity 2 times in a row. I may have to create a new rule to wait 10 minutes between taking a losing trade and taking another trade. This allows me to take a break mentally. This allows me a break to mentally take the loss, reevaluate so I don't break any rules, and allows the market to develop more information before making another irrational decision based on seeing the next candle open and wick above my entry again. Always go with the flows of the market. Never try to force something that's not there. So with the improvements, I thoroughly, right, within each slide, I already broke down what I did right and wrong. But when it comes to the improvements, you really tie everything together, wrap everything together. I kind of leave out what I did right because the improvements slide is for whenever you struggle, right? Whenever something's not happening, worst case scenario, you can go back to all of these trading days, whatever day you have documented, and simply just go to your improvement slides and see what has been damaging my trading in the past and how can I prevent it and not do it again from this one slide. So be thorough as possible, be super thorough in this slide and describe what improvements you can make and, to fix your trading. So that's in that slide. And then even after finishing for the day and writing up this slide, I still went and took another trade and broke more rules, right? Luckily, I sized down on this trade, but I included this because it was, again, I went and I did the same exact thing that I just said not to do and broke rules. What happened? Again, 43.28 is the point where the 5 minute, 15 and 30 minute trend changes to bullish. First zone failed to continue the trend lower and only sold off a few points, broke and closed above 43.28, which switches the trend. I got in at the second zone and saw a 5 minute close, and I had to get out knowing that the trend was changing. So I wanted to see if this first zone will hold. We tapped it, it didn't. So what happened? We took out supply, which we didn't take out supply at the time. What I wanted to see was this zone get run, a wick push up here, and then hurry up and flip and close all the way back below this zone. Crazy, right? Crazy that I was even thinking that. What I should have done was waited to see what this candle does, because if this candle pushes and closes through these highs like it did, the trend is now bullish. You can no longer look for sells on a 5 minute if the trend has now switched and there was a change in character here. We're now looking from, we're now looking to take buys instead of taking sells if prices pushes and closes above this area, which was, very simple. Again, very simple to spot that and tell that something's changing in the market if we get a push back above here. It's very easy. If the trend was continuing, let's continue to leave back behind supply and continue to create new supply and continue to take lows and then create new supply and continue to go down, right? If we're not seeing that, there's something changing in the market. So again, even when if you break a rule again, come back and include that trade, because even this reinforces what was previously stated in our other slides. You really got to make sure to tie everything together, and bring everything together so that you can learn from the full L. It's not, if you're just taking these losses, I'm not trying to take these losses just to take these losses. You got to learn from them. You got to pick them apart and improve as a trader. But I feel like these are the real videos you got that people need to see. These are the real, full transparency. Again, there's no right way to do it, but you have to journal in a way where you can learn from your trades. Now I have softwares I use to track my trades, right? And really look at what, risk to reward and how much money I'm making and what I'm losing and how long I'm holding trades. Like I have stats. I can track stats and track what type of trades I'm taking. But in my journal, I'm not really drilling down the stats, like what type of trades what type of setups, I'm doing. In my journal, I'm more, I am breaking down what type of setups I'm taking a little bit, but I'm not tracking it as much as I could. Like I'm not tagging my trades. I'm just learning from my losses pretty much in my journal. I'm tracking how I feel, the things I do right, what patterns I'm seeing that way. I'm not necessarily, oh, this is an A+ setup. I'm not necessarily saying, oh, this is a B trade, or, grading the trades. You could do that if you want. There's, however you want to get it done, but definitely capture your trades and capture your thoughts on the market in a way where you can learn from the losses you were taking, and a way where you can learn from the things that you did wrong. So let me know how you guys have your journal set up. Let me know how you guys get better as a trader in the comments. Make sure you guys check the TikTok out if you haven't. If you're on TikTok, make sure you guys go check the YouTube out. And if you guys like the video, leave a like. Make sure you guys subscribe for the next one. And thanks for checking in.